Hello everyone and welcome back to another video, and in this video we are going to be talking about market structure and the importance of not focusing too heavily on one leg of price action. In other words, making sure you're zooming out before you take a trade and you're looking at the bigger picture. Now, this is not top-down analysis, although this may feel very similar to the video that I just made on top-down analysis. If you haven't checked that out, do go and check that out on the channel. But although it may feel like that, it's actually very, very different, because I'm talking about making sure you're zooming out on the same time frame that you're on, just to check where you are within the structure. Now, I'm going to turn to the computer now and I'm going to show you exactly what I mean. Now, it's important to be able to understand what market structure is and how it moves before you sort of take this information on board. Now, as we all know, markets do not move in a straight line. They move in trends, bullish or bearish trends, in the form of higher highs and higher lows, or lower lows and lower highs. And that is formed of impulse, correction, impulse, correction. Now, you may have heard those terms before, but that is what makes up a market trend. Now, what I mean by that is how a market normally travels is we get an impulse up. We get a correction, we get another impulse, we get a correction, we get another impulse, and we get a correction. And that is how markets tend to move. Now, you can see here, although it looks like it's going up and down, up and down, up and down, and it looks very messy, you can see that the whole trend itself is actually all going up. And that's what a trend actually consists of. And what we've got hit there is we have a higher high, a higher low, an even higher high, an even higher low, and you get the point. Another higher high, another higher low. That's how we identify a trend. And sometimes people would draw trend lines. We don't draw that personally in our strategy. But if you just want to make sure, if you just want to learn how to identify a trend, you can draw those just to make sure you're looking at the right thing. Now, that is how a trend normally moves. And where this video comes into place is once we've established which direction the market is going in, and that's through doing this process here, looking at whether we're bullish or bearish. It's important to understand before you take your trade is, where are we in this? So if I delete this now, if I do this again, are we in an impulse? Is your trade within that? If so, it's a pretty good idea to trade with it, because you're going to have a lot of momentum behind you. Or are we in a corrective phase, which is this up and down choppy move? And if we are in this up and down choppy move, it's not to say that you can't still take a trade within that. In fact, there's loads of trades. That's where you get the most trades, actually, because there's so much price movement going on. Now, this is where it's important to understand where you are within the structure. Now, if I'm up here and we have a demand zone all the way down here, and what we're expecting price to do is to come all the way down, bounce off of that, and then go higher. If I'm up here, it makes sense to take a sell, given the right conditions, right? We can trade into that demand zone to then take the longer term buy. But if I'm all the way down here, really close to this demand zone, why would I take a sell when the bigger demand zone is only right below me and I haven't really got much room to target for any reasonable profit? And I'm certainly not going to target below that demand zone there, because the chances of it breaking that demand zone are very slim, or the odds are against me, in other words, because I'm expecting a reaction off that demand zone. So if I'm down here, I'm not going to be taking a sell. If I'm up here, maybe I can take a sell into that longer term buy. Now, I hope that makes sense. I'm going to take you over to the charts just so I can clear that up for you and hopefully explain it to you in a bit better manner. And hopefully you can understand it in a real life scenario. Now, this is a trade that was taken by us. I'm ashamed to admit it, because we should have seen it and we should have done our homework and we should practice what we preach. But at the time of this trade, we, for some reason, missed it, and we ended up taking the trade, and it was pretty foolish on our part. So we learn from that, and that's why I'm making this video, to show you the lesson that we learned, and hopefully you can take it into your own trading. Now, what did we miss here? So you can see here that if I zoom out really quickly, I'm going to get the replay mode on just a minute so I don't lose where I am. Right, you can see here we have just had this big impulse up. We corrected, we had another big impulse up, and we're starting to correct again, just on a bigger scale. Now, what I did not see here at the time of taking this trade is, if I go down to the 30-minute, which is what we took the trade on, and get rid of that, when I looked at this, I was too zoomed in on this leg of price action here. So this little bearish trend. Now I'm going to draw this out for you to make it make sense. This bearish trend here, I was looking at this, we were making lower lows and lower highs, and I thought, right, okay, I will take this as a continuation trade to continue going lower. And it was a textbook setup. We had everything that we looked for in the trade. We had our demand zone, we had our liquidity, we had the break of the liquidity, we came back to the zone, we had the candle close, and I was taking this as a continuation trade. Now, here's the bit I didn't see. If I had have just zoomed out, I would have known that if I go to the 4-hour wheel quickly, I did not realize where we were in this structure, and the fact that we are coming off this massive, huge demand zone there, that had I have seen, I would have known that we're expecting a huge reaction from, which we ultimately did get, and the fact the trade went against me because of that. Now, here's the lessons to be learnt. Instead of focusing on this leg of price action here, this bearish trend, zoom out, get the bigger picture, understand where I was in that structure. I could have taken a sell trade up here, no problem, because then I would have been trading with the shorter term bearish trend into the demand zone for the longer term buy, and that would have been absolutely perfect to do so. And that's the only exception. It's kind of the exception that goes with the rule, if that makes sense. You can trade against the trend if it's to a specific demand zone that you're anticipating price to go to then take the longer term buy, or vice versa from the buy to sell side. You can temporarily trade against the trend if you're trading into a zone like this. But if it's already hit the zone, you do not want to be trading with the expectation of that zone being broken and it's going to go straight through it, because it's probably not. And that's the importance of zooming out and making sure, looking at where you are within the structure. So there you go, guys, a nice quick video for you there, just to pass on a lesson that I learned from a trade that I didn't take all that long ago. And the idea of the video is it's a lesson that I've learned and hopefully you can now avoid in your own trading. So as always, we have our own Discord in the description below, which you can come and join. It's free at the moment. So come and trade with us, come and chat with us. And yes, like I say, we have a good time in that Discord. So yeah, come and join it. Why not? So don't forget to like and subscribe, and I will see you next time.